All right. Today was the Nvidia earnings and they did not disappoint. But after hours, we are seeing plenty of volatility, and I will caution you, do not put too much weight on after hours price action. It is very important to pay attention to what is happening while the market is open, because that is when you are getting the liquidity for the bid-ask spreads that are actually moving the market. So as tempting as it is to look at the after hours price action, we will need to look at price action at the open. And on SPY, all that matters right now is that critical range bottom at 556. And if we do break down below 556, we will likely start down towards 548 and then a gap fill right around 545. And that will be a critical support zone, because as you can see, we have a rising 50 EMA and a rising 20 daily moving average there, as well as a gap fill. So that will be a very important level of support. But if we do not break down below 556 and we hold that support, it is still possible that we're pushing higher towards a brand new all-time high above 570. So 556 will be that line in the sand. All you need to do is have a trade plan prepared for price action above 556 or below it. Below it, it is completely fine to get risk off and sell your long positions until we can get back above it. But while we are above it, especially if we gap up and hold above it and continue to push higher, it will be much easier to stay bullish in this market. So we'll call 556 that line in the sand. If we break down below it, it is completely fine to get risk off. But if we continue to hold above it, it is advantageous to stay risk on, in my opinion. This is a bull trend with price action very bullish while we're above 556. So use that as your risk level. And keep in mind, if we break a risk level, you need to define when it is appropriate to take risk back on. It could be at support, or it could be after we bounce off support and show proof of buyers and strength. Or you can just attempt to catch falling knives and get low risk entries if you know and understand how to do that correctly. So let the price action do all the talking here. SPY 556 is going to be a great risk level. And during open market hours tomorrow, we can see if we can hold above it or if we are going to break down below it. On the NASDAQ 100 triple Qs, we were down 1.13% today, and we did close down below the risk level here, which I told you was 473. And below 473, we were looking at a very good possibility to fill a gap at 465. So after hours, it looks like that could be a possibility, so pay attention to that tomorrow. And if we close that gap and continue lower, then we have that 20 daily moving average right around 463. Below 463, we could push all the way down to another gap fill right around 454. So there is downside risk now that we did break down below 473. So you could just stay risk off below 473 and wait for proof of bullish price action. Now at this point, bullish price action will require a break back above 473, so you could just stay risk off until we close back above that risk level. And keep in mind, we do have a potential of a lower high rejection, so things could get out of control to the downside if we cannot hold any of the support below. So manage your risk however you see fit. There's going to be opportunities for low risk entries, but keep in mind what I always tell you about low risk. It doesn't guarantee you're going to win. Low risk simply means if you lose, you are not going to lose a lot. So there's still the potential for the bulls to hold support and continue to form higher lows, but if we cannot hold these critical support zones, you will want to continue to get risk off. And then finally, Nvidia, this is obviously the man of the hour. This is the stock that has been moving the market for 2 years now, and in some ways has even replaced Microsoft and Apple as the market moving stock. And this was the range I told you we were watching, between 123 and 130. And as of now, after earnings, it does look possible that we are going to break down below the bottom of the range at 123, which puts it in play that we could be pushing down towards this support at 117. If we can't hold 117, it's possible we push all the way back down towards 109. So you have very clear risk levels, and you could just stay risk off below 123 if we gap down and close below it. So jumping back over to the S&P 500, this is a market very near previous all-time highs, and a lot of people are getting extremely bearish. So just keep in mind that if everybody is correct, they are actually going to be getting bearish at the exact top of a market, and that is very rare and very hard to believe. So even if we start to get a pullback here, do be very open to the idea that it is just going to be a higher low before we continue higher. And if you want to stay bearish, it is going to be down below SPY 550. If at any point we are above 556, I do believe it is going to be better for you to be bullish. You could be bearish below 556, but above it, I think it's better to be bullish, and I'm just going to keep it that simple. If you want access to all of my intraday updates, my technical analysis, and my trade ideas, that's in my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.